Here we go. The April jobs report due out in just moments. Economists expecting 62,000 jobs created, with the unemployment rate holding steady at 4.3%. Taking a look at futures as we move into this report. And again, these job numbers have been market moving, as you know, if you watch this program each month when we do this. The Dow is up 158 right now. S&P is up 34 and change. NASDAQ up 200. Let's see what happens. And let's bring in Allianz Chief Economic Advisor Mohamed El-Erian, former Trump economic advisor Steve Moore, Piper Sandler Chief Global Economist Nancy Lazar, and Job Creators Network CEO Alfredo Ortiz. Also with me is EJ and Tony. A lot to go through. Nancy Lazar, good morning to you. First to you, what do you expect to see?
Well, we would be a little bit more optimistic on the job market, something closer to 100,000. If you just take a step back and look at what drives jobs, it's companies. And corporate earnings in the first quarter were stunning, up about 20% on a year-over-year basis. And incrementally, business confidence is gradually improving. So we're pretty optimistic on the job market. From a simplistic perspective, I'd watch unemployment claims. They're a weekly number. Actually, they're a hard count. They're better than payrolls. I'm sure we're going to get some significant revisions to payrolls today, but claims don't get revised like payrolls do, and it's a nationwide weekly count of the number of people signing up for unemployment. And they're down about 5-6% on a year-over-year basis. They inversely correlate with the economy in general and suggest growth in the second quarter is accelerating.
Nancy, I'm glad you brought that up, because Steve Moore yesterday, when initial claims crossed, actually the continuing claims number, but that was at a 2-year low, another 2-year low. Last week, that claims number that Nancy's talking about was much less than expected. It moved the markets.
Yeah, it does. And if anything, we have a bit of a labor shortage, not so much a job shortage, at least right now at the moment. You know, I'm going to guess a slow but steady number. I think Maria, when she was interviewing her when we were talking last week, she called the U.S. economy resilient. And it really is. Even with these spiked oil prices, we seem to be doing pretty well.
No, absolutely. And, you know, Mohamed, the other thing, we had Stephen Moran, Fed Governor Stephen Myron, on the program last hour, and he talked about the immigration component. And in a way that was an economic boost going forward. You know, you're easing up the housing supply when you've got less illegal immigration coming into the United States. That there were all these boosts to the fact but that also changes the job market. And that could be actually a positive, that you could see wages go higher because of that scenario that we're seeing play out with the U.S. population, Mohamed.
And that was a great interview, Cheryl. Yes. I mean, if you think of it, it is the number of jobs and how much you get paid that is key to labor income. Labor income is key to household consumption, which is key to the global economy. So we're going to keep an eye on those two things, as well as you point out, what's happening to labor force participation. Is it a demand issue? Is it a supply issue? So there's going to be lots of information in this jobs report. And like Steve, I expect that this will show a resilient U.S. economy, and it shows that the jobs continue to grow and that the consumer is able to overcome for now the burden of higher gas prices.
Yeah. EJ and Tony, what are you expecting as the numbers are crossing? We're going through them.
Like we were saying earlier, Cheryl, the big thing I'm trying to pay attention to right now is how much people are making. What is happening with earnings growth? Most likely we had inflation outstrip earnings growth.
I'm going to jump in and interrupt you. Sorry, EJ, but look at the market take off. Here's what just happened. We got a much better than expected jobs report for the month of April. 115,000 jobs is the non-farm number. 115,000 jobs. The expectation was 62,000. Again, a strong print for the U.S. jobs picture. The unemployment rate, as expected, holding steady, 4.3%. Manufacturing jobs, we actually saw a loss of 2,000. The expectation was for a gain of 5,000. And on the private side, we saw 123,000 private sector jobs added. The expectation was 75,000. EJ, I am so sorry that I interrupted you, but I wanted to get these numbers out because I was looking at the Dow futures jumping on this report. Your reaction?
Well, definitely good headline number, Cheryl, but as I'm just looking through the next part of the headline, it looks like the employment level is actually down about 226, I think. So the employment level is down. In other words, the number of people actually working looks like fewer people are participating in the labor market for the month. So this might be another one of those reports where it's difficult to interpret the conflicting signals. The survey of businesses is showing additions of payroll, but the survey of households is showing fewer people employed, with, again, the labor force participation rate dropping and also the employment to population ratio dropping. Those are two things that have really underperformed for the past 6 years. It's been since the pandemic. We've never really recovered on those two categories, I believe.
Nancy Lazar, the labor force participation rate coming in 61.8%. Your reaction?
That's being held down by these very consistent increase we've seen in the number of retired folks. Baby boomers are retiring. It's been in a rising trend for about a decade. I look at the prime age labor force participation rate, which is roughly 24 to 54 years old, and that actually has been in a rising trend and has been high. So the overall is clearly being pulled down by the increase in retirement, but the prime age, we're actually pulling new people, and I have not seen the number this morning, but we have been pulling new people into the prime age labor force participation, and that's because of the breadth of industries hiring. We look at the employment diffusion index, percentage of industries that are hiring. It's been in a rising trend. I've been in California these past few days. Talk came up that there are job shortages in goods producing, blue collar jobs. That's not a sign of a weak labor market. And so we think the strength we're getting in capital spending is driving the strength in these goods producing jobs. These are high paying jobs. I had an anecdote where a young man, 27-year-old plumber in the Midwest, is making $350,000 as a plumber, helping to build out some of the pharmaceutical plants in Indiana. And so the labor market is different. Again, I'm bullish on blue collar jobs because of the capital spending cycle, the build out we're getting, not just from AI, but also factories. And that is really creating a healthier economic backdrop. I would really push back on the idea that we have a weak labor market.
I'm really glad you brought that up because, Mohammed, the thing is, Maria had on Kelly Loeffler, small business administrator, earlier this week on the program, and we've been talking about small business in America and how strong small business and how good small business is doing. And that issue came up that we have a shortage of electricians. We probably have a big shortage of plumbers right now. I mean, and that these are actually very high-paying jobs, strong jobs, manufacturing jobs. Maybe we didn't get that in this print today. We got a lost 2,000. But overall, that is a section of the economy that's growing, and that adds to GDP. That adds to personal wealth.
It does, Cheryl, and I think the message from this report is consistent with what we've heard elsewhere. There is no problem with the demand for labor. There's strong demand for labor. On the supply side, we're going through multiple transitions, be it illegal immigration, be it retirement. There's lots of issues going on the supply side that need to be looked at. But overall, the demand for labor is strong, and that's why you see job creation continuing to be higher than people expected.
And Alfredo Ortiz, join the conversation here. Where are the jobs? Where are you seeing the strength in the U.S. economy?
Yeah, Cheryl. Well, first of all, it's my favorite week, by the way. It's Small Business Week, of course, and small businesses are really the generators of job creation. And never has been more the truth than this particular week and this particular year. And under this administration, under the leadership of Kelly Loeffler, small businesses are leading the charge here. And I think in particular, where we're going to start seeing that job growth is exactly what I think Mike Rowe likes to call dirty jobs. But those blue collar workers, the plumbers, the electricians, I mean, that is actually the jobs that we're seeing are actually growing, that are actually immune from the AI growth. It's probably the recent grads and that are probably most in trouble, quite frankly, because of AI. And in terms of the layoffs that we're seeing from the large corporations, I actually think what we're seeing is actually these large corporations using AI almost as the catapult or the catalyst or as an excuse even to get rid of that DEI layer of unproductive workforce, quite frankly, that they were hiring after COVID. They're getting rid of those people that used to say, hey, I want to be paid 40 hours a week, but only work 30. So they're getting rid of those, but our small businesses are growing. And again, the Small Business Administration, record lending. I mean, small business applications are up 20%. SBA has lent in 2025 alone $45 billion to over 800,000 small businesses, and so that part of the industry of our sector of our economy continues to really chug along and really push the economy forward.
I want to bring in Tomas Philipson, former White House Council of Economic Advisors acting chair, and of course he's an economist at the University of Chicago. Tomas, it's great to have you here as always. We always enjoy your commentary. Give us your initial thoughts on what you're seeing with the April jobs report.
Clearly, the February was a dip that we now are sort of in the back mirror of. I mean, people were really worried about January, March were really strong, but February wasn't, so people sort of had a view of that. I think it's not so surprising because we got a really good services report, which covers the latter part of April, the last 2 weeks, and also the UI claims obviously look really good the last 2 weeks of April. So I was a little bit surprised by the low expectations relative to what actually happened in April. So, but it's great to see that this is actually now moving forward. Now all we need is consumers to be happy again, and we'll get a consumer report coming out today as well. So
we'll see how that goes. And you know, Nancy, I was looking with the. Oh, go ahead, Steve.
Cheryl, I just wanted to add one quick thing to what Thomas was saying. You know, this is a real tribute to a lot of Trump policies. I mean, we saw the big, huge number on investment, which is, of course, the seed corn of a growing economy, maybe the most important economic statistic. That number was off the charts in the first quarter. And why did that happen? In large part because of the Trump tax cut, which allowed businesses to write off their expenses for capital purchases immediately rather than having to depreciate them over 5 or 10 or 20 years. And so a lot of the good news that we're seeing, and again, I think the buzzword for today is resilience, because let's face it, when you have a price of oil that's $100 a barrel, that's a tax on the American economy. And yet we're seeing the economy just plow through that, at least right now. One other quick point. You know, I've said this so many times every time we do the jobs report, but it bears repeating. The big number is that we have 11,000 people retiring every day, and we only have 8,000 people entering the workforce. Now, I agree with you all that, you know, controlling illegal immigration is important, but my goodness, we need a lot more legal immigration if we're going to make this economy grow. Because, and by the way, this is seasonal. You know, this is the season where you get a lot of the seasonal workers in, and a lot of employers are saying they can't get those in right now. So we've got to, you know, seal the border. Trump's done a great job of that. Now let's increase the legal immigrant visas so we can have a even faster growing economy. Because as EJ said, this report does show the labor force is shrinking a little bit. That's not a great sign.
All right. Well, Nancy, I want to get your take on a couple of things. I was digging into the report, and not a surprise, the government's talking about healthcare jobs, transportation and warehousing jobs, and then retail trade. Again, I failed to mention this 10 minutes ago, but we did see a decrease of 8,000 government jobs, Nancy. But, you know, that makeup is really what you were talking about, the dynamics that we're seeing in the labor market.
The decline in government employment, I would add to what Steve just said, is really important, because that is going to be a source of labor supply, where government workers, I don't wish anybody to be laid off, but at the end of the day, if they move into the private sector, they become a more productive part of the economy, further increasing productivity. So the decline in the government is a source of labor supply. The strength we're seeing in construction is again, great news. I mean, there's a whole host of people who in the Midwest or around the country where those are great jobs. And so rebuilding the middle part of this country, which we are doing in part due to the tax incentives, as Steve mentioned, it's been actually going on for about 15 years. Middle America is our favorite emerging market, and those are great for not just white collar jobs, but in particular very bullish for blue collar jobs. And so yes, the diversity of industries hiring is really important. important, and the strength in small businesses is stunning. Again, the big guys get the headlines, but it is smaller businesses that is where over 80% of jobs are in this country, and those incentives, tax incentives, are also very positive for smaller businesses, not just big businesses. And so at the end of the day, the strength we're seeing in small businesses, the breadth of the economy in general. Again, who would have thought 2 months after the initiation of the surge in the price of oil that we'd be talking about the economy and employment actually accelerating?
Yeah, no, that's a really, I agree with you. And certainly the markets, where the Dow is up 205 points right now. We almost had new records for the markets last night. And, at the same time, and Mohammed talked about this, because of this economy, because of the effects of the Big Beautiful Act, despite what we're seeing with this oil price shock across the country, you do still have consumer numbers coming in fairly strong. Spending seems to be strong. I mean, that tells you that the U.S. economy, the American consumer, is resilient. And again, this conflict with Iran, this may be ending in the next few days. We shall see what transpires today, but all that kind of plays into a strong economic picture and a strong GDP.
Yes, and I would add two things. The U.S. is consistently outperforming other advanced economies, and that attracts capital into the U.S., and it attracts capital into the stock market. Mm-hmm. The second thing is that we haven't talked about is the average hourly earnings. They came slightly below expectations. So the consensus was for 0.3% increase last month, came in at 0.2%. So this is the Goldilocks economy, if you like. We're producing lots of jobs, but wage growth isn't excessive. And the market likes that because it suggests that the inflationary pressures will be less. The one qualification, and we had the number come out yesterday, the labor share of income continues to go down. And that has economic, social, and political implications, and it's something to keep an eye on. But for the short term, the market likes the fact that this economy is resilient, it outperforms other, it is delivering more jobs, and the inflationary pressures that are coming from the labor market are less than what people expected.
Steve Moore, something that we haven't really touched on yet, but is the issue of AI jobs in the economy. There's two different schools of thinking here. Now, we had the Challenger Great Christmas report come out. You're laughing. Don't do that yet. The Challenger Christmas report came out yesterday. It said that, the biggest share of job cuts was because of AI. Companies were saying that we are utilizing AI and we are cutting jobs. At the same time, you've got brick and mortar companies like a Walmart, like a Target, et cetera, that are utilizing AI to make their workers more productive. They may not be hiring as strong right now, but they are indeed using AI to increase the profits of the company. Walmart, maybe you take out some back end jobs, but you put that person in the front of the store. Your thoughts on that?
So it's a tricky issue, but the big issue here, and the big takeaway is we are about to enter the greatest period of productivity enhancement in the history of civilization. And AI is going to lead that with respect to robotics, all these things. I've mentioned before, I'm on the board of a company called Lightspeed. We build houses with robots. We can build the houses at half the cost. So it's going to drive down prices. It's going to make the American, it's the biggest thing since electricity. And so, but people are really nervous about it, Cheryl. That's why I was kind of, you see this revolt that's going on around the country against data centers and AI. And people are, if you look at the polling, people are more afraid of AI than they're for it. So I think the tech industry has done a terrible job of explaining how this is going to change the world in such an incredibly productive way.
Alfredo, that reminds me that we've seen several reports just this week about the not in my backyard movement when it comes to these AI data centers. Yeah. Look to Virginia. And, they've got these small communities trying to argue back and say that they don't want these, behemoths in their backyard, which you can understand. At the same time, whether it's Virginia or it's Texas or it's Arizona, the states are bringing in these data centers because of the economic boost that they will get from these build-outs. Comment on that.
Yeah, absolutely. The AI data centers are actually leading a big construction boom all over the country. Yes. I've talked to folks, for example, in Georgia. For example, we're in northern Georgia. AI data centers are going up left and right. And so really, really big opportunities from a construction standpoint for a lot of our American workers. And if I could actually address the AI issue, because for small businesses, we're actually seeing it as almost like the great equalizer, quite frankly, for our small businesses. It's an opportunity for these businesses to actually be able to think much larger than they ever have been and know that they don't actually have to double, triple their labor force to be able to do that. They're not firing. They're just not necessarily needing or finding the need to hire people at the speeds or at the records that they did before because of AI. So AI, for example, there's a company that I've referenced before called Control Point Associates up in New Jersey. They're looking at doubling, tripling their revenues with basically just a small incremental increase in their labor force to be able to do that. And that's all because of AI.
Yeah, and certainly, EJ, as we look at the next few months, as we start to see these build-outs begin, because many of these projects haven't even started, you have to look at what that does for growth, but also you've got the other side of this, the Big Beautiful Act, and no tax on tips, no tax on overtime. Seniors got tax breaks. I mean, all of that plays into a growth story.
Oh, absolutely, Cheryl. And I mean, frankly, these tax returns that we just got, which you just mentioned, were impeccably timed given the increase that we've seen in fuel prices. In other words, a lot of families have been able to take those higher tax returns and use them to offset some or all of the higher gas and diesel prices that they're facing today. And by the way, I think that whole story is actually present in this jobs report, too. In other words, people trying to adapt to these higher fuel prices. One of the things that maybe helps square the circle on why the number of payrolls increased while the number of people employed fell, if we look at part-time work, that increased, number of part-time jobs. At the same time, the number of multiple job holders, those folks who have more than one job, that also rose last month. So it seems like the story the data is trying to tell us here is the fact that more people, in response to higher consumer prices last month, went out and picked up an extra job. Now, hopefully, prices obviously will be coming down soon as the war with Iran concludes, and that'll help stabilize, I think, the labor market as well. Let's not forget, though, one of the things that the Fed has pointed out is that given all of the changes to both labor demand and labor supply, that has to do with AI, that has to do with immigration policy, et cetera, the break-even rate for these jobs numbers is remarkably low. In other words, the economy actually does not need to add that many jobs right now to prevent unemployment from rising.
Yeah, well, Tomas Phillips, and the other thing I failed to mention was leisure and hospitality. That was also cited by the government as an area of strength. So that means that despite higher energy prices, which does affect your grocery store, which does affect your trip to on a spring break trip, et cetera, your summer travel, at the same time, those jobs are actually being built up. And I think that's a strong sign as we move into the summer months.
I mean, the consumer has been a little bit puzzling. We have the worst consumer sentiment in years, essentially.
But there's still spending.
And then we had a very strong consumer in general. That's slowing down a little bit. But I think that's mainly driven by essentially, it's confusing because we have low unemployment, we have booming markets, we have booming investment, et cetera. This is not a bad economy, but the consumer is very pessimistic about the economy. I think it has to do with sort of the red and blue sort of view of the economy, if you want. The party in power always think the economy is great. The party out of power thinks it's really pessimistic. But the mainstream media is influencing the mainstream to believe, essentially, that this is a bad economy. I think that's partly driving this wedge between consumer behavior and the economy, and then consumer sentiment.
I'm glad you brought that up because, and Steve, I could hear you nodding in agreement, and I agree as well that, look, the mainstream media says one thing, that things are terrible, and obviously gas prices are moving higher. We know that, but this could be a short-term oil shock, to be clear. At the same time, what the sentiment number tells us and what people do, the spending number, the retail sales numbers that we get, that's a different story, and that's a good story.
Yeah, it's what we call in economics a revealed preference. We don't have to ask people what they think. We just have to watch what they're doing, and they are spending. I think the big takeaway from this report, if I may, is simply this, and Mohammed probably would agree with me on this. A month ago, all of the economists were saying stagflation. We're going to have high inflation and high unemployment, and it's going to be like the 1970s all over again. And look, I'm not saying we're out of the woods. I mean, it's a dangerous period for the American economy with these high fuel prices. And yet, what are we seeing? We're not seeing an increase in unemployment. And inflation has been, it's driven up a little bit by those high oil prices, but not nearly as much as people thought. So it looks like we are weathering this storm.
Yeah, and Mohammed, the other side of this is corporate earnings. This could have been a very tricky earnings season. This was the first quarter, so the month of March played into, of course, with the overseas conflict with Iran. At the same time, corporate earnings have been strong, and we have seen record after record, especially for the S&P and the NASDAQ. We barely missed 2 records last night.
Absolutely. I mean, corporate earnings have surprised consistently on the upside. And while executives are warning about the possibility, not the probability, the possibility of the consumer weakening, the numbers are very strong. Look, Cheryl, we have 3 engines to this economy. We have the consumer engine, we have the AI data center engine, and we have the government fiscal engine. And these 3 engines right now are all going strong, and that's why we are outperforming others. I just want to stress something that Steve said. The AI promise is critical. And if companies think of AI as labor enhancing as opposed to labor replacing or labor displacing, we have ahead of us one of the biggest productivity jumps, as Steve said. And that's critical because for years, we have been borrowing growth from the future. The debt numbers are worrisome. Government debt just crossed 100% of GDP. So we need to get this AI promise into the economy. We need to see productivity and growth go up so that we can, if you like, compensate for years and years of borrowing from the future.
EJ, let's talk about speaking of the future, what's coming up. We're going to get another read on CPI, another read on PPI, and we expect these numbers, I guess the headline numbers, of course, are going to be on the hotter side. But is there other pieces of these reports that you're going to be watching when they cross?
Oh, absolutely, Cheryl. One of the things that some of the other panelists were just talking about has to do with consumer spending. The latest report we just got yesterday from the Fed shows consumer credit rising very quickly. So again, it looks like the consumer is taking advantage of different mechanisms that they have to try to smooth out their consumption. And so as long as we can keep that going and we can get the war wrapped up relatively quickly and prices come back down, it is hopefully no harm, no foul. But when we do look at CPI, one of the things that we'll be expecting in the coming months is how these higher oil prices will filter through to core, which obviously doesn't include energy, but it's just not directly. Every time you go to a store, you grab an item off the shelf. How did that item get there in the first place? It got there on a truck, fueled by diesel, right? So what I'm getting at here, Cheryl, is that higher energy prices affect everything we do and everything we buy. We will expect, again, in coming months to see those higher oil prices filter through to core. But again, hopefully this spike in oil is going to be relatively short, and therefore the spike in overall inflation relatively minor.
And Tomas, this is in a year where we've got the midterm elections coming up in November. You were obviously at the White House. I mean, how do you message this from Washington to kind of assure Americans that what we are doing overseas is the right thing for the country right now, even in the face of these higher gasoline prices, diesel prices, jet fuel prices?
Yeah, I mean, the war in Iran is really a cost and benefit calculation where the cost is clear. It was clearly understood before the war that this is going to have increasing effects on energy prices. That's not a surprise at all to anyone. Those costs, the side effect of the economy, in my view, are swamped if we are successful in basically neutralizing the nuclear power of a country that has its goal to death of America. And I think that benefit is hard to measure and it's hard to see because it's a long-run benefit. But the administration, I think, has to convince us that that benefit is there, and that if it is, it's clearly something we should be willing to pay 2 or 3 months higher gas prices for.
Absolutely. Steve Moore, similar question to you. You've got the domestic story going on right now, that economic story, but then you've also got next week, you've got this meeting between President Trump and Chinese President Xi Jinping. That trade relationship is also a crucial part of the U.S. economy.
Yeah, no question about it. And by the way, China is not really helped at all with respect to the the Strait of Hormuz. I hope Donald Trump confronts President Xi and says, look, by the way, China and India are the two countries that are most dependent on Middle Eastern oil. So I hope he takes a very firm stand with them. By the way, China has a big control over the fertilizer market. I'm very worried about what happens if we don't have the fertilizer. We're going to get the crops in, and we're going to see potentially higher prices of food in the fall. So I think he's got to take a very strong stand with China, because they have not been a good global leader at all on any of these issues, because they're trying to strangle the American economy.
Yeah, EJ and Tony, what do you make of this? Again, this next week is going to be crucial, and we know that the Treasury Secretary Scott Bessent, Jamieson Greer, who joined us on the program earlier, these are the two key figures in these trade negotiations, more so than anyone. This groundwork is being laid. And, this is the trading relationship right now, the China-United States relationship, along with the issues we've got with the Europeans.
Oh, Cheryl, absolutely. And look, Steve raised a great issue with fertilizer. The oil crisis is very apparent because it hits us in the face every week when we go to fill up our tanks. The fertilizer crisis, not so much, because that's not going to trickle down into consumer prices, going back to showing up in core CPI, right? That won't show up for many months. But I think this is actually a great opportunity for President Trump to leverage the economic pain that China is experiencing by losing so many industrial inputs with the Strait of Hormuz being closed. I think the president can actually turn this into an opportunity to work with China to force the rogue state of Iran to the table and get the strait opened up soon.
Yeah, Mohammed, talk about that, and specifically the world economy. It's not just the U.S. economy. More so, Mohammed, it's the Europeans that have been suffering under this blockade with the Strait of Hormuz and this conflict. How does this play out for the Europeans?
So first, Europe and China. Europe needs to wake up. It's being dumped on with massive amount of Chinese products. They no longer are able to sell to us, so they are dumping like crazy in Europe, and Europe seems to accept this, and it's going to deindustrialize the continent even more. So the first thing Europe needs to do is just to wake up that it is now on the receiving end of a massive amount of manufacturing products from China that China is unable to sell elsewhere, and that's going to hurt them. The second thing is, unlike us, they don't have a growth momentum. Unlike us, their policy choices remain a little bit strange, and unlike us, they don't have deep capital markets that are willing to take risk in order to fund productivity-enhancing innovations. So I'm afraid that Europe is going to continue to lag here, and that's not good for the global economy. And you're going to hear more and more about this phrase, global imbalances. People are going to worry more and more about global imbalances going forward.
There you go. I've got about 30 seconds. Alfredo Ortiz, final word.
Yeah, I think just right now we're facing a great economy, and small businesses are going to continue to be the engine of growth as we are seeing it right now. And this whole discussion about where we should be for basically full employment, I think that's a conversation we should keep on having, because those ideas of 150, 160,000 jobs, I think it's more like 50,000 jobs, right? And because of AI and the great efficiency that's going to be coming from that. So that's where I think the future story is right now. It's a massive labor force realignment. And by the way, the fact that we're private sector jobs versus government jobs, a great thing.
All right. Well, guys, it's been wonderful to have all of you here. EJ and Tony, Mohammed El-Arian, Steve Moore, Tomas Philipson, Alfredo Ortiz. Once again, 115,000 jobs, a blockbuster number. Again, the rate staying at 4.3%. Stuart Varney, here we go with the open. Over to you.